Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull-bear point and figure market breadth summary chart for June 23, 2019. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 1.04 rose from 0.76 last week. The total count of securities in bullish or bearish patterns increased fractionally to 3,033. The count of bearish stocks decreased 13%, while the count of stocks in bullish patterns increased 19%. The Pirls P&F Market Breadth Summary chart shows us a market now 1 week in bullish territory. Paid subscribers have access to the Open Office Calc data, from which the chart is generated. You may become a paid subscriber by emailing S2P Market Signal at protonmail.com for payment and access instructions, or subscribe via Patreon. To receive the weekly Pirls Stock Market Commentary via email free of charge, simply enter your email address in the space provided and click Follow. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 138 points for the fourth advance in 16 weeks. At a negative 127.04 points, it continues below all 7 tops above plus 100, has risen above the February 2018 bottom, and continues above the remaining 4 bottoms below minus 100 in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in distribution mode, with average daily volume higher than the prior week. In the last 2 weeks, the Nasdaq had 3 accumulation days and 2 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode, on lower average daily volume. Momentum. The CCI 20 daily, now in a Woody's uptrend, at 122.78, up from a positive 69.70 last week. The CCI 20 daily continues outside the plus or minus 50 range for a Woody's zero line reject long entry signal. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's uptrend 14 weeks ago, while the daily CCI 20 began a Woody's uptrend this past week. The CCI 20 weekly, in a Woody's uptrend at positive 82.70, rose from positive 43.33 last week. At Friday's 6/7 close, it formed a Woody's zero line reject long entry within the plus or minus 50 range required. We will continue following this trade simulation in next week's commentary. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and 4 of the bottom 5 are negative. Summary: S&P Retail and some tech on the top. Oil Services, Oil, and some tech on the bottom. Bullish: S&P Retail and Comp Tech continue in the top 5. Bearish: Brokers and KBW Bank have entered the bottom 5. Disk Drives has re-entered the bottom 5. Networkers has entered the bottom 5. Semis has left the top 5 and entered the bottom 5. Oil Services and Oil have left the bottom 5 and entered the top 5. Gold and Silver has re-entered the top 5. Focus this week from www.zerohedge.com. Quote, "How Trump outplayed Powell, and here's what happens during next week's critical Trump Z meeting." End quote. The following 2 paragraphs are our takeaway summary. When it comes to the near and medium-term trajectory of the market, there were two events that mattered, as we summarized back on June 14th. The first major catalyst was last Wednesday's FOMC meeting, where Powell had a choice: lose the patience and end the rate hike cycle, or stun the market risking a crash and continue tightening financial conditions. Of course, as everyone knows by now, Powell threw in the towel, capitulating to both the market and President Trump's relentless barrage, and confirmed that a July rate cut is virtually assured, at least according to the market, which now see greater than 100% odds of such an event. The second catalyst is next week's G20 summit in Osaka, Japan, where Trump will meet with China's President Xi and perhaps put an end to the trade war. What is most surprising about all of the above is how skillfully Trump played both China and the Fed to get his desired outcome: a continued belligerent stance with his superpower adversary, even as Powell, who is hardly Trump's biggest fan, is forced to do everything in his power to protect Trump's back. Thank you for watching this week's Santu Pirls Stock Market Commentary, featuring the proprietary Bull Bear Point and Figure Market Breadth Summary Chart, compiled by Donald Pearl, S2P Market Signal at protonmail.com. For Santu Pirls Stock Market Commentary, I'm Cynthia Pearl, hoping that you have been enjoying a peaceful and pleasant summer weekend, that you are looking forward to a prosperous and productive week coming up, and wishing you true success.